8:43, if you or someone you love has or is considering getting a reverse mortgage, you need to listen up. New rules that started Monday may affect you. And here with everything you need to know to protect yourself and your loved ones is Fox 29 lifestyle lawyer and advocate, Shari. So the first question is what exactly is a reverse mortgage and how does it work?
That's a great question. And a reverse mortgage is called that because it's exactly the reverse of what we consider with a normal mortgage. So with a normal mortgage, Mike, you pay the bank every month. Okay. With a reverse mortgage, the bank pays you. So the money's coming from the bank to you, either in the form of a line of credit or a lump sum or monthly payments. And the thing is that you have to pay the bank back when you vacate the home. So for most folks, that means they either pass away or they move into assisted living or with a family, or they sell the home. And this is available for anyone who's over 62 because the point of a reverse mortgage is to allow folks who haven't saved up a lot of money to be able to tap into the equity that they have saved in their home to live off of.
Important to know. Okay, so that's the good points. What is the problem with the reverse mortgage?
Well, the problem comes exactly from that provision where you have to pay back the bank when you vacate the home. Because the thing is with reverse mortgages, you can qualify for one as long as you hit the age of 62, but the older you are, the more money you qualify for. So a lot of folks are counseled to leave younger spouses off of the loan. And the problem that those younger spouses run into is when the older spouse passes away, the younger spouse who's not a borrower is left having to repay the loan and move out. The Consumer Financial Protection Bureau, the FHA, AARP have all noticed that this has been a big problem, a lot of deceptive advertising. And here's the fear, Mike. There's about 750,000 reverse mortgages out there right now. But our baby boomers are just getting to the age where they're starting to take out reverse mortgages. There are 32 million baby boomers with homes. So the threat is that this problem could really grow. A lot of surviving spouses left in the position of having to sell their homes to pay off these mortgages.
Somebody's got to pay that back to the bank.
Yeah, or change the rules, which is what they've done.
Speaking of which, how do these new rules fix that problem?
Sure. Well, the new rules start August 4th, and basically what they say is that if you're a spouse who's under 62, you're now allowed to be on the loan. That wasn't the case before.
Okay.
The new rules also say that if you're the surviving spouse and you weren't on the loan, you no longer have to repay that loan when your spouse passes away, as long as you stayed married until the date of death, the house continued to be your primary residence, and you continue to pay the taxes, insurance, and homeowners assessments on the home. Then you don't have to sell. So particularly in areas like Florida or Arizona or North Carolina, where we have a lot of these 55 and plus communities, this is going to make a huge impact on a lot of lives, make it a lot simpler for a lot of folks when their spouses pass away.
And that's why we're glad we have you, Shari, to come in and give us this information and make sure you're making the best decisions financially. Holly, back to you.